Good afternoon, everybody. This is Dan Hussey with ElliotWave Forcast.com, bringing you our live trading room recap for May 8th, 2014. Let's begin with the S&P 500. Apologize, my charts have gotten very, very slow over the last 20 minutes, but we'll just bear with it. All right, so S&P 500, we're still coming up off of an inflection zone long. His upside targets towards a 1890 in the short term. Looks like the market is going to now try to pull into full halfway back for the day, which is also next in the series, halfway back long off the lows. We had once to target, twice to target, and now next in the series. This can also be, because we broke the full halfway back short, the market might pull back into a full ambush long, which is at an 1870. So 1876 in the short term should be come in as support here this afternoon. If not, look for the 1870s. This can all be part of a bigger structure, though, of A wave down, B wave up, and get an even bigger C leg of some larger expanding flat down towards 1840. So please, be aware of that. Please, trade cautiously, but inflection zones are there, they get reactions, and they do get freeze. So again, from a 4-hour or larger time frame, we pulled into full halfway back for the year, and we are looking for upside targets north of 1930 to 1950 area still. But in the meantime, expect some chop, expect the market to be a little tricky, but ultimately should resolve higher in the end. Dollar yen, lots of great discussions today on the dollar yen. We've traded equal legs up into this 104.20 area. The downside targets for equal legs from 104.20 is towards a 99.40. Okay, equal legs down in an A, B, C wave down will take us into a 99.50. And then jumping out to a big daily chart, the full swing from the 93.95s to highs has support at the 99.60s. So we've been talking about this 99.60 area as one of our alternates for several weeks now. It has now become the primary as we see the market heading lower in a larger three-wave structure towards the 99.60s. We continually are making new lows for the month of May in the dollar yen. This is not a bullish setup. We are looking to be, I'm personally looking to be a seller towards the 102.20s here. And it doesn't have to, this can go straight down from here, but 102.20s are an area, inflection zone short, I'd want to be a participant at for that swing down to 99.60s where I would become a better buyer. Euro yen, making it very tough to trade on the short term time frame. It's continuing to make a new low for the month of May. Again, not the most bullish of indicators here. Not an indicator we use to trade off of either. We have a 4-hour wedge setting up. The sideways price action is just inside all the prior highs and lows. We're still inside two inflection zone longs, a 136.71 and the 140 level, which will ultimately take us towards 146 and 150. However, it's looking like this could be part of a larger 3 legs down in equal legs into a 139.60. So right now I'm looking more towards 139.60, 139.70 for one more minor low here to potentially then get a bounce in 3 legs down. Again, all valid while above a 138.75. So we can trade all the way down to a 139 and still be in this inflection zone and look for new highs after that. So definitely looking like a little bit of a pullback here, at least into the low end of our range. I don't see anything tradable in the near term. If you wanted to be long, the market provided inflection zones from 140 and 136.70 already. At this point in time, you're asking for way more risk in a trade. Okay, and I don't see any reason to be short either. Aussie yen, surprisingly, the Aussie has has held on to most of its strength. We have equal legs down into this inflection zone long at the 94.60 area. Provided a bounce now, and we've broken the full shorts off the prior highs. So the market could easily pull back into a full halfway back ambush long into 95s. The market is holding a next in the series long here at the 95.20s. It provided a little inflection zone bounce here, but looking for the 95s to be the area of participation for this market to head higher from in the near term. Okay, and again, looking for the Aussie yen to trade into a 97.50 now. The pound yen, wow, this has just got really slow. Do not know what's up, guys. I'm sorry. All right, pound yen, 166 support level had already traded, has upside targets towards a 179. 168.70 support level had traded, upside targets to 176 from there. Going down now, smaller time frame. I don't see any reason to be a seller. Again, this is still bullish. There's a bullish undertone to the market. However, the next inflection zone looks like it exists at a 171.50. That's both equal legs down into 171.30, as well as this next 50% inflection zone into 171.50. Look for the market to rally from that area. This would be a new low for May, which is not great, but doesn't break our price measurement at all. Look for the lows from there for a push into new highs for the pound yen, and ultimately at some point, because we're coming out of this kind of wedge triangle structure and potentially breaking out higher, there is going to be potentially some kind of terminal move. So need to be very aware of this and be cautious. But on a small time frame, if you adjust accordingly, you can definitely be long these markets for these moves. But at some point there is going to be a much bigger correction for the yen, and thus you have to, from a larger time frame, there really isn't much of a swing trade to be had. Most of these crosses have already given those swing trades, and now it's just intraday scalping at this point. So again, 71.50 to 71.30 inflection zones looks like we're trading down into almost as we speak. Let's actually move to the US dollar crosses. Let's take a look at pound US dollar. All right, so 169 support level for the pound US dollar. It's a near-term inflection zone. Please keep in mind that we've hit upside targets from our prior inflection zones and larger time frame inflection zones, and a pullback into the 167.30s or 166.30s will eventually happen in the near term. 169.10 should produce a bounce towards a 170. Again, 20 pip first targets, 20 pip stops in this type of setup. We're at the end of certain cycles, so we have to be very aware that while the cycle can continue on and press on further, it can also come to a close and reverse. We're in borrowed time, so to speak. So to better determine how to trade the 67.30s and 66.30s, we're going to be looking for now the structure on the way down to look for equal legs to be a participant. So nothing to do yet. Unless you're a scalper. The swing trades have all hit their targets to the upside, and now you're looking for a pullback in the smaller time frames. Okay. The euro dollar. This is incredibly slow, guys. Really have to apologize. It is not normally like this. Probably need to clean up my charts. Got too much stuff going on them. All right, the euro. Euro's trading down into a 138.30 to 138 inflection zone. We would really like to see 3 waves down before being a buyer, but it may just trade this inflection zone before we get a 3-wave structure. Again, we're still bullish the euro towards a 141 and ultimately potentially a 144 target that we have from the upside to the upside. Excuse me. Euro prior is in a number of prior inflection zones, including the 137.22s and a much larger 133 level from earlier this year that it needs to fill its upside targets. So again, 138.30s inflection zone support valid while we are above May's low at a 137.77. Notice how that aligns with the 61.8 65% lines here, the invalidation for this setup. So we'd like to see the euro stay above. Below, we're looking for a larger pullback, and we'll cover that tomorrow if and when it happens, okay? Because that means there's something else going on that that we'll need to cover in more detail and is not appropriate for our end of day recap. Finally, let's take a look at the Aussie US dollar. Just like it's the Aussie yen counterpart, we've had equal legs down into the 92.30s. Okay, we've also broken 61.8 lines of the opposite side short and have potential for an ambush long into the 93s at this time. So a 93 is a better buy for a move to new highs here. We continually have been making new highs for the month of May, and while we are above a 92, we are looking higher for the Aussie yen, or Aussie US dollar, excuse me. Below a 92, we're looking for a pullback into the 90.60s, where there's a much larger inflection zone that could take it higher. Again, we will get to the point where we're looking for an end of cycle for the Aussie. However, support is holding. We're seeing very clear pullbacks, getting reactions from inflection zones, and there's no reason to be fighting the trend at this time. So with that being said, I'm sorry the recap's a little bit shorter and abridged today. My computer is going a little haywire. I need to take a look at it and get things worked out for tomorrow so charts aren't this slow. But with that being said, have a great day, everybody. Hope to see you all back tomorrow. You can use the exact same links to get into the room tomorrow, or visit the ElliotWaveForecast.com live room trading page, of course. This video will be posted publicly on YouTube, as well as, I believe, a tech blog on the site. So have a great day, everybody. Like I said, we'll be back with you tomorrow, and as price action develops.